Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the latest data on industrial stoppages, we look at the recent foreign currency activity, update the situation with Geneva Finance, and we'll wrap up with what the other media are reporting. Industrial action has followed a seasonal pattern, being higher in the second and third quarters of most years and lower during the summer holiday periods. There has been an increase in strikes since the employment law was changed. There's also been a feature of industrial action that more has been taken by public sector employees than in the private sector, and big gains in union membership have not seemed to have occurred in the private sector. Lower levels of unemployment and strong demand for both skilled and unskilled workers has also changed the bargaining positions of both employers and employees. These factors have resulted in industrial activity in the June quarter being at its lowest level ever in this period, and back to similar levels under the old employment law. There were only 5 strikes in the June quarter, involving slightly more than 350 people, and only lasting 1.5 days each. Trading in the New Zealand dollar is absolutely massive. There is an up-to-date and useful background review on this subject by Dr. Neville Bennett on this website. About $4 trillion worth of transactions are entered to each year, more than 20,000 times bigger than the GDP of New Zealand. It truly is a massive market for our currency. There are 3 strands of activity in this market. About 10% of this activity goes on in the spot trading. This is the simple buying and selling of currency, probably the activity you think of when you think of currency trading. Then there is the trading in forward contracts. This is when businesses agree to buy or sell for delivery at some future date. It is these contracts you can use to lock in a rate, and these are used widely by exporters and importers who don't want to be at risk of exchange rate volatility. But this accounts for only about 2% of market activity. By far the largest part of trade in our currency, more than 85%, is in currency swaps, options and general arbitrage, also known as currency derivatives. These are transactions similar to forward contracts, but between financial intermediaries rather than for international trade. They are also similar in that they do not necessarily require delivery of the currency itself, do not result in spot transactions at the end, but are contracts that get closed out without delivery. Standard & Poor's have reduced Geneva Finance's credit rating from B- to a D, just days after it reduced it from a B+. That earlier reduction, which seems to have more to do with the rating agency's general view of the finance company sector as a whole, rather than Geneva itself, has clearly put pressure on the flow of funds into the company and its reinvestment rate. It also looks like it has spooked its wholesale funding backer, the Bank of Scotland, and inhibited the rollout of that support. Geneva now plans to seek debenture holder approval to institute a moratorium on debenture repayments, pushing back all due dates by about 6 months, and a vote is due to be held on the 5th of November. A yes vote will give the company time to restructure its activities to account for the halt in funds inflows. A no vote will likely drive it into receivership. In the meantime, Geneva has said it has ceased accepting any new funds. And finally today, a quick wrap up of some other recent news. ASB Bank's chief economist has warned that households are already starting to feel the bite of higher interest rates, and that bite will collectively feel more painful in the next year. Disquiet within the trustee industry is mounting at the level of influence rating agencies will have over the fate of non-bank deposit takers when ratings become mandatory within the next few years. These concerns centre around rating decisions becoming self-fulfilling prophecies. Moves to limit the power of sovereign wealth funds, such as Singapore's Temasek Holdings and the new China Investment Corporation by the G7, has the support of Australia, and these moves could well ensnare the Cullen Fund. You can get more news and start with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.